Glad to have you join us again on the program Capital Market and Temple Ashaju. The 25th week of the year just ended was a remarkable one packed with some phenomenal events. The first was the assent of the 2018 budget by President Muhammadu Buhari, which saw the recognition of a historic 9.2 trillion naira budget in the country. Other events of the week include the decision of the Organization of Petroleum Countries, OPEC, at the 174th meeting in Vienna, Austria, where crude oil production compliance was reviewed downward from 152% compliance level to 100%. Now, the third for us was the amazing performance of the Nigerian Super Eagles team at the World Cup tournament in Russia. The capital market plays a significant role in all of these events, and this evening we'll bear our minds on the reactions of the markets and these events in the just ended week and take a forward guidance of things into next week as to how the markets will price in these factors on our radar on the show this evening. Well, we have the pleasure of introducing our guest analyst to you, Wale Olusi, who is a research analyst at United Capital. Welcome to the program this evening. But before we get you talking, let's quickly do a review of the key numbers and look at the news that we had making the rounds in the capital markets this week. First, we know the federal government spent 643.6 billion naira on servicing the nation's domestic debt between January and March this year. And that's according to the Debt Management Office in its quarterly debt data for first quarter of 2018. The data shows that the country's public debt stock as at March the 31st stood at 22.7 trillion naira, while the external debt of the federal government, the 36 states, and the Federal Capital Territory were at 6.74 trillion naira. The DMO explains that 239.8 billion naira was spent on domestic debt servicing in January, 144 billion naira in February, and 259.7 billion naira in the month of March. And officials of the Securities and Exchange Commission have expressed determination towards the attainment of 80% financial inclusion by the year 2020. The Commission's acting head of markets development, Mr. Francis Okafor, who was speaking at a sensitization program in Kwale Area Council of the Federal Capital Territory, says the Securities and Exchange Commission, the SEC, as well as other regulatory bodies, have been meeting quarterly to improve financial literacy and inclusion in the country.
What we have done is extending this program to the grassroots. We have also started with financial inclusion states programs in all the states. We were in all the states in the zones. Last 2 months, we did all this program. The population and the presentation, people come, and the program is very successful from what we get from our feedbacks. Greater number of Nigerians are excluded in the financial industry. Therefore, there is a program that by year 2020, up to 80% of the populace will be included. And greater population of people who are excluded are the grassroots. So this program is meant to get everybody possibly included by the year 2020.
And moving on into the markets now, the Nigerian Stock Exchange, where Dangote Cement, tradable on that market, has announced the issuance of 150 billion naira commercial paper program set to be listed on the FMDQ OTC Securities Exchange. The 3-year program will see a first tranche of 50 billion naira offering opening on June the 22nd, 2018 through to June the 26th of this month. Last November, Moody's Investor Service downgraded Dangote Cement's corporate family rating to B1 from BA3. At the same time, Dangote Cement's profitability or probability of default rating was downgraded to B1 PD from BA3 PD. The company's national scale rating, however, remains unaffected. But the Pan-African cement manufacturer has earmarked the $350 million for capital projects this year, including the building of export facilities at seaports for shipments to neighboring West African countries. Now let's take a look at some of the numbers that we need to quickly review. We'll start with the unlisted securities market representing the NASD OTC Securities Exchange, where the USI came in lower at 649.16, shedding 0.1% this week and leaving the market capitalization at 446.07 billion naira. Volume and value of all the transactions that has taken place on that platform so far by year-to-date performance, volume stands at 1.02 billion, while the total value is currently hanging at 5.26 billion naira. And moving on to the fixed income market, average yields in the Nigerian fixed income market rose 26 basis points week on week to 13.22% as liquidity strain and sell-offs at the long end drove uptick at both ends of the curve. At the long end, following sell-offs across varying long-dated instruments, average bond yields jumped 15 basis points week on week to 13.54%. Looking at the numbers you have on screen, they reflect the trading on Friday at the FMDQ OTC Securities Exchange, where the total deals was 46 and total value came in at 10.28 billion naira. But on the other hand, we'll take a look at the week-on-week performance of the Treasury bills. Average Treasury bills yields rose 36 basis points to 12.9% week on week, following strain on market liquidity by CBN's open market operations issuance worth 137.4 billion naira split across the 219 and 93-day paper, as well as the federal government's net repayment of 26.7 billion naira at this week's Treasury bills auction. For the numbers there, you have a total of 619 deals yesterday at the secondary market of the FMDQ, while the total value of all the transaction for Treasury bills alone now was 187.77 billion naira. Putting the whole transactions that took place on that platform in terms of fixed income now together, we have grand total of 665 deals with a total value of 198.059 billion naira. Now let's look at the equity markets, where the Nigerian equity market ended the week negative, shedding 2.74%, with a year-to-date performance back in the red territory by 1%. The negative run was driven by losses in bellwether stocks, Seplat, Dangote Cement, Guarantee Trust Bank, and Zenith Bank. On the sectoral front, the insurance index was the most sought after by 3.55% this week. All other indices settled the week in the red territory. And sticking with the Nigerian Stock Exchange now, the Nigerian Stock Exchange has now announced a review of its equities market structure with effect on from Monday, July the 2nd, 2018. Now, the new market structure comes with opening and closing auctions to be followed by imbalanced sessions where bids exceed offers and vice versa. Other features of the new structure include an expansion of participants in the auction period, the introduction of size test condition, as well as price determination during that auction. And it includes changes to the market price volatility mechanism with daily limit up and limit down price band of 10%. And that is now based on single reference price and for a symmetric percentage of 10%. Well, basically we have Wale Olusi, who is a research analyst with United Capital, joining us now to look into this new structure of the Nigerian Stock Exchange when it comes to equity, ETFs, and of course fixed income. What for you do you think is informing this development at this point in time?
Well, thank you for having me, first of all. I think the Nigerian Stock Exchange is, advancing up until now. Even though we've been improving the technology we use, currently we use a technology called XGen that allows you to, trade using, all the computer devices and all. but there's always been a problem about the efficiency of the market. I think that's one area that the management of the exchange is looking at. So I think what they are doing with this reviewed structure is to see how they can improve price discovery, they can make the markets more efficient, they can create more liquidity. I mean, I think in 2011 or 12, we brought in the idea of market makers, you know, to make sure that, you know, when there are demands, some large dealers come to mop up this demand when, you know, the supply is not there. But now, one of the things this new structure is looking at is making this market maker more active. Then everybody will be participating during the market period. And of course, I think you read something around the imbalances in the market.
Yeah, the IOs.
Exactly. So that's one area they want to look at and make sure that, you know, all imbalances are met and, you know, prices can be matched within the market period at a more efficient way.
So we have a slide explaining the current equities market structure and the new equities market structures. And if we take a look at the pre-open, which is now 9:30 a.m. to 10:05 a.m. as the current structure. Yeah. Then it has a pre-open adjust for 10:05 to 10:15 a.m. and then continuous trading. You know, then you have pre-close adjust and then the close period. Now pre-close adjust will now be 2:29 to 2:30, while the close is just 2:30. Help us to understand all of these and as to how it affects traders and then operators on the floor of the NSE.
Okay, so if you take a quick look at the table they gave about two of them, I think one thing that, you know, catch your attention is the obvious change in the level at which prices change. In the old system, one thing we used to do is we have a 5% changes during the pre-open, which is not open to the general market. I think it's basically for the dealers. Yeah. Then there's another 5% change during, you know, the main market that opens at 10 and end at 2:30. Then another thing that used to be in operation was that the previous close price has also been, you know, activated properly, because what we used to have is if a stock closes at 2 naira today, yeah, that does not become the reference price in the following day. The reference price for the following day is the opening price, I think, during the pre-open, but, you know, it's slightly different from the closing price as at, say, Monday now. Okay. On Tuesday, the new price, which is the reference price, would not be the same. But with the new system they are creating now, what we are saying is that if a price closes at 2 naira on a Monday, then the reference price for the following day, which is Tuesday, is going to be 2 naira. So if there's a, you know, 2% move on the 2 naira that it closed yesterday, yeah, then you have that 2% based on the last close in the previous day. So those are some of the things they are trying to regularize. And again, they are trying to make the system more efficient. Like I said, all trade will happen during the 10 o'clock to 2:30 period. So what you have during the pre-market period and close market will just be the market dealers trying to fix, you know, the imbalances and settling a lot of, you know, technicalities that does not directly concern the, you know, traders and retailers. But the most important thing for them is you now have a 10% maximum change in price, yeah, during the day. Before now is around 10.25%, but that will change. If it's going to drop, is around 9.75%. But everything has been regularized to 10% maximum movement in price during the day, and everything happened between 10 o'clock and 2:30. Unlike before, yeah,
okay,
yeah,
2:20. I think that's the new
exactly,
structure. But let's quickly also look at how these will eradicate all of these distortions, because there are times that you will have different numbers of coming in from different houses. You know, anyways, we have to quickly take this break now, and when we come back, we'll continue the discussion, and of course, bear in mind on how the football World Cup tournament going on in Russia impacts on the Nigerian stock markets.